Morning, everybody. Can everybody hear me? I hope they can. Welcome to the first day of spring here in Victoria. Isn't it a lovely sunny day? Don't we just wish we were all here in person rather than sitting here looking at my ugly face on a TV screen? But welcome to Melbourne's Digital Summit session number 1. Unfortunately, this is going to be our only opportunity at the moment to see each other. I wish it was face-to-face, but we obviously can't. So we'll make the most of this today. We've got a great lineup of speakers. I want to thank you all for joining us for our Getting Back to Business with the FBAA Summit here in Victoria. As you all know, my name is Brett Spencer. I'm the State President for Victoria and Tasmania here, and this is going to be our last event for 2021. We obviously have today and tomorrow, so you'll probably get the same blurb from me tomorrow for those logging in. But as I said, hopefully we will be able to meet face-to-face very soon. Look, I just want to say we've got over 130 or 140 people here today. So if you get a chance, share your screen. We'd love to see your pretty faces or your bedroom faces or your tracksuits or whatever it is you're wearing today. And kids as well, if they're in the background too. So feel free to join in when you can in the chat box, ask some questions, anything along the way. I'm sure we'll be able to get to.
How do I get rid of that blue bag?
Oh, there we go. It's always the way with Zooms, right? Yeah. So if we can mute our cameras, that would be good. While the speakers are on, that would be awesome. Just a few bits of housekeeping. I won't need to tell you all where the toilets are. You all know where your own toilets are.
1, 2, 3, 4.
You all know where your exits are, left and right as well. So you'll be all fine with that. For each of these eSummit sessions, though, you will get 1.5 hours of CPD points. After each session, you'll receive your CPD code with everything in there. So stay tuned through all of that. We'd also like to thank all of our sponsors, because without our sponsors, we couldn't have these events. We couldn't have the great, wonderful speakers with us today. And it's through their continued support and help that we can educate all of our members and get you guys the assistance that you need. All of those details are on the system afterwards. Don't forget that if you refer a member, you will be able to get 10% off your membership. We do have a beautiful program where you can transfer under an MTO with no fees, no docs, no worries, where you can transfer an existing member from another organisation over to ourselves. So I encourage you to get your friends and colleagues to join the FBAA if they're not already members. For those of you who are members, don't forget to download our app. It gives you all the information, the updates, all your webinars. You can register everything. It's really cool. It's been built in conjunction with our new CRM system. So please continue to access your members area on your app, as well as our brand new website to log into all the new resources. I did notice that we've now got a whole range of member benefits, including discounted gift cards, auto stuff. Like there's a whole heap of stuff in that members area that it's just now come fine. So we've also added, importantly though, that the big digital educational and knowledge testing courses for those who still need to complete it. And we'll keep updating that section as you need to see it. So our broker support program is really important for all of you in this time of need, and our lockdowns right across the country. Hopefully we won't need to worry about those much longer, but log in here, look for the support, and use the information that we provide as much as possible. So you would have each all received an agenda in the registration boxes. I think it's also in the Zoom chat box. I think it should be sitting in there, and we can then look at starting, I think. So I think the first person I'd like to introduce to hear from is the lovely Ebony Maxwell from Bluestone, speaking on the topic of 85%, 90%, no LMI risk-free products, to talk about what they do at Bluestone. Ebony, welcome aboard again.
Thank you so much for having me. I'll get my presentation up. Hopefully everyone can see that. I'll take that silence.
Yeah, I can see that.
Perfect. Thanks again. Good morning, everyone. I hope you're all doing well. Unfortunately, you know, we've got to obviously do it via Zoom and not face to face. So I can't wait for the day that we're actually out and get to see everyone. But for now, obviously, good morning. For those that don't know me, I've been around for Bluestone for 7 years. I'm the Southern Regional Sales Manager for Bluestone. And so what I just thought I'd just take the opportunity, because I've only got a short time to present, is really just sort of go through a little bit about sort of what Bluestone are doing. So a lot of people still sort of think about Bluestone as that non-conforming style lender. So yes, we still do the tricky style of deals, etc. But majority of what we do is in that prime space. So I guess if I can sort of tell everyone or give a tip to, you know, potentially change a little bit of the mentality around Bluestone, that, you know, to actually consider us for prime deals as well. And the big key as well that a lot of people don't actually know is even in our prime space, we will do 85 and 90% with no LMI, no risk fees. So these are genuine no LMI products as well. So they are basically open to everyone. So, you know, some lenders out there potentially may have a little bit of, you know, if it's a 90%, they'll have no LMI. However, there's always stipulations around what they can actually lend to. So it can be, okay, that can only be for medicos or doctors or lawyers. They have to earn a certain amount, or the loan amount has to be a certain amount. And there's sometimes all these parameters around it. Across all our products, we don't have any of those parameters. So it doesn't matter if they're a doctor, or it doesn't matter if they work at, you know, Coles checkout. It's basically open to anyone, which I think is really great. So from our 85 perspective, we can actually do owner occ as well as investment. So that's a really great tool. There's been a lot of people come out of the woodworks lately that have been buying investments purchases as well. And obviously it just means to them that obviously it's less amount of money that they potentially need to put in on that one. And, you know, we can do owner occupied purchases, refis for 85% at the rate of 2.99. If we come across to the 90% LVR, it is only for owner occupied purchases and refis only. We say no cash out, but there is a little loophole against that. If it's controlled funds and we're dispersing the funds, then that's not classed as cash out. It's only cash out to us is if we're physically putting the money into the customer's bank account. So it can be things for like, you know, debt consolidation and all that sort of stuff. Up to 90% we can pretty much do as well. So the biggest keys that I wanted to also sort of point out here as well is a lot of times, you know, when you're sort of dealing with in the, you know, the prime space or the first tier lenders, you do have a couple of hurdles that you do actually need to work around. So the biggest one is the first hurdle that you normally have to do is the credit scoring. So, you know, the deal comes in, computer says no. Then you've got the positive reporting to have to worry about. Then there's DTI issues and then potentially LMI issues. So you potentially got 4 hurdles to have to jump through to be able to get to that end result. The great thing about us is across all our products and even on the 90% of, you know, on our prime deals, we don't have any of that. So there is no credit scoring. There is no positive reporting that we do. There is no DTI, and obviously there's no LMI. So the great thing about this is, you know, when deals actually submitted, it gets through to an underwriter and the underwriter picks this up and looks at. We can do fully approved, you know, pre-approvals. That's no dramas. So what you kind of find is, and what you really need to do as well is rack and stack. So potentially the rate might be, you know, a little bit higher than what, you know, you can potentially get with LMI. But if you actually look at the amount that they're going to be saving without having that LMI and that capitalization on top, they're generally going to be in front by doing it this option. So I just wanted to take this opportunity to go through this. If you've got any questions, please feel free to reach out to myself or the BDMs that will be able to help you further. But otherwise, has anyone got any questions at all?
Can't see anything in there at all, Emily. So look, I think that's great. How good's that product? 85%, no worry about credit scoring, the dreaded CCR, which affects so many people. That's a fantastic product. Well done.
No worries. Thanks for having me.
So next person up is to speak to us is Danielle Brooks from Lend, who is going to be talking to us about some great technology, you know, making transaction business loans easier. So Danielle, I'll pass it over to yourself.
Excellent. I'm trying to share my screen. Thanks, Brett. Can everyone see my screen?
Yep.
Excellent, perfect. Good morning, Melbourne. I hope you are enjoying your first day of spring somewhat to the best you can. And our head office is in Melbourne, so certainly from the team at Lend, our thoughts are with you all. So look, I'm going to fly through this today and try and make it a little bit exciting. I'd like to acknowledge the FBAA for moving these events to digital, to our lender partners that you'll hear from today. And also, when we talk about technology, we recognise our friends at FE and what they've done in the mortgage space. And where we fit in is in the commercial transaction space. So let's have a look at what we have got to offer for you at Lend and why, especially our resi brokers, why you should be considering looking at the Lend platform. What makes us unique, most suitable products are available to you guys in seconds. You save time, increase confidence, and you maintain compliance, which is really, really important. Everything is one place. Quote, application, validation, submission, it all happens on the platform. And we've got that AI-powered matching technology, which does the hard work of finding a lender for you. How do we do it? So again, really important, we know that resi brokers are certainly very focused on compliance. And we know that whilst bid is not happening in our space, we know that one day it will. And so we really try and make sure that we keep everything compliant for you. So we've got some custom built technology that we use around Lend Score, Lend Match, Lend Assist, etc. And of course our Lend ED. But then we do the financials and the credit profiles by tapping into Equifax, Ilion, Xero and Creditor Watch. We build a customer profile through ASIC and ABR. And then our new asset platform, which is to be released to the public on Monday. Obviously, we incorporate glasses and all of those things, and it all comes into the Lend ecosystem to make your life easier at one push of a button. So the magic of Lend Score, what it actually does is it gives you an accurate estimation of the client's probability of obtaining a loan. So we know, for instance, with our partners at Prosper, that once a Lend Score hits over 60, that the probability of that client being funded is over 85%. So we pull out, non-revenue related credits. We look at dishonours over 90 days versus 180 days. We have a look at loan performance. We drag out, other loans that the customer has. So this really gives you a clear indication on your client without needing to touch their credit file. So you can use Broker Flow ID if you're already using Ilion, or you can use Ilion bank statements through us and it's free of charge. So we don't charge you to capture those bank statements. Comprehensive solution. I'll just run through this really quickly. We now offer a white label solution. We've got a huge product diversity. You can rely on a single platform in the commercial space. We give you greater insights to help increase lender conversion. We keep a clear audit trail for compliance, especially in the asset space. So when you're playing with quotes and changing things, it's really important to be able to have that audit trail. Education. So a lot of you will be used to seeing my face around with Lend ED, but it's something we're really proud of. And we started this last year at the beginning of COVID and have carried it on through this year. Built in-house. So you can customise, you can ask for particular pieces of data or particular views that we can build for you. You can actually create your own referral hub within your broker network. So if you need to work with a lender who you're not accredited with, rather than taking it outside of your network, you can refer it to a broker who has got accreditation. And we also support you obviously with marketing, and it's really, really flexible. It's designed to complete asset and complex transaction referrals as well. Product diversity, just give you a quick look there at all the products that we offer across the platform. And, our newest, obviously, as I said, is asset finance and commercial property. So product diversity, you can see here, this is just a screen capture of how the system may look and how it will present options to you, whether it's match the product, whether it meets criteria. So even if you meet the criteria of a particular lender, but the product you've entered doesn't match, so you've asked for a secured loan, but it meets an unsecured lender, it'll actually let you know that you've got that option. Lender diversity. So there's just a quick squeeze of the lenders we've got, and you'll hear from many of them today with Lee and Matt, and again, more tomorrow. So the guys at Speedy. So there's a quick snapshot of who we now have available to transact with on the Lend platform. So we have Lend Assist. So this is the referral hub again, and to keep it quick, because I love to chat and I've got to try and keep this to 6 minutes or Brett's going to smack me virtually. So look, you can have referral hubs, full compliance, full support. We've got a dedicated team who are super knowledgeable and, you know, are here to help you actually get these deals through. So if you're new to commercial, don't let it scare you. You need to own whole of wallet. It is more important than ever. So we're here to help. Know you're covered. Verified partners with DocuSign, Digital ID, Verimoto, LSEO and Glasses. Audit trails, so protection for you against disputes, future proof, hierarchy user review, notes, and obviously document storage all in the one place. Broker compliance, so we have stepped up our compliance, especially now with the new asset platform. So you know, memberships, industry association memberships, we do digital ID, and we can also assist you now with lender accreditations. So if you need help getting accredited, then you can come to us and we can roll up all your documentation you've provided with us and help you on your way to getting accredited. Alien bank statements. So this is just a quick look at what we actually do in this space, and I'm hoping that this is going to work. Oh, look, there we go. I didn't mean for that to happen, but anyway, we do some really cool analysis on bank statements. So we give you monthly revenue charts. We show you, you know, dishonours over 90, 180 and 365 days, because we know that lenders have different appetites depending on a 3-month period, a 6-month period, or then once you start moving up into, you know, the big size loans, then you really need to provide 12 months worth of bank statements. So we do a lot in the bank statement space, and we've got some great videos that we can share with you guys through the FBAA. Business validation tools. So this is some of the stuff that we use in order to get you access to checking whether, you know, a business is selling a vehicle and you think it's coming from Mike's Motors, and then you click on it and you find that Mike's Motors is actually someone's garage. So there's a lot of validation tools in here that we use to actually help speed the process up with asset finance. Accreditation made easy. So LendED provides you with a comprehensive suite of learning content. It's fully recognised by the FBAA. And again, not only do we cover the product stuff, but we've really moved into that thoughtful leadership piece. And we love how we can get a lot of lenders who are operating in the same space on a panel together to talk about things that are really important to brokers and SMEs. So that's something that we really pride ourselves on, and we love having those robust discussions. So thanks to the FBAA for supporting our education program. And just to give Trent a plug, we are rolling out some stuff with Accendo in the coming weeks, which will allow you to access their programs, which when you're starting to write complex you know, commercial transactions and need to write credit memorandums and really take a deep dive in and understanding financials, it's absolutely gold, and that's why we'll be partnering with them as well. Have a great knowledge base for you, tutorials and guides. If you can't get us, we're pretty sure you'll find the answer on the Lend platform in our knowledge base section. Marketing support. So we give you lead forms that you can put on business loan landing pages. We can help you generate leads. You can access the latest thought leadership content. We've got social media marketing kits in there, email marketing system, SMS marketing system. So it really can be a one-stop shop where if commercial is not your focus, you can still own it. And that is so important in the current environment. So that's me. There's the whirlwind of Lend. Thank you to all our Melbourne brokers for listening in. And Brett, I will hand back over to you.
Thanks, Danielle. I did have a question, but if you can be quick, you might be able to answer it. Great platform. Knowing a little bit about Lend, will Lend also facilitate refinance of SME loans, or is it just new purpose of funds for SME loans?
No, refinances as well. So we pass on 100% of the comms, Brett, and the guys that are on here that our lender partners will also know that we do that in the refinance space. So the tech that we use, we handle refinances, and you'll be paid for that client as long as they continue to refi.
Excellent. Yeah, it's a question I've been asked a few times about the platform. So thanks for that, Danielle.
No worries.
Next, we'd like to look at welcoming Matt Pride from the ALI Group. He's going to be presenting on truth. It's a great topic. Well, over to you, Matt.
Guys, can you hear me now?
We can hear you now, Matt. There you are.
Sorry about that. I was still sitting on mute. Thanks, Brett, for having me along this morning. Thanks, guys, for letting me have a chat to you for the next 5 or 6 minutes. I'm going to talk to you about a very important topic this morning, which is about moments of truth. So what we refer to as moments of truth at ALI is the claims experience our clients have with us. So what I'm going to take you through is our claims experience for the financial year 2021 and a couple of the stories behind that. So this is what our claims look like for the financial year of 2021. So we paid over 12.9 million in claims to over 430 clients, with the youngest trauma claimant just being 30 years of age. So this is a bit of a snapshot of what those claims look like. 40% were for death and terminal illness, 45% were for trauma. This is a really important stat and one to take away from today. 64% were for people under the age of 45. So I'm going to say that again. 64% were for people under the age of 45. 53% were for males, and 76% of our trauma claims were for cancer. And that was followed by stroke at 12% and heart attack at 8%. So you can see by this slide that trauma and illness affects people of all ages. And certainly over the 2021 year, we saw a large proportion of those being under the age of 45, which is typically speaking when they're at peak debt. So behind every one of our claims, there is a broker and there is a client. And I'm just going to share with you briefly Jeffrey's story. So Jeffrey is a client of ours from the Hunter Valley in New South Wales. He's a 41-year-old accountant. 2 years after taking out his mortgage, he was diagnosed, regrettably, with colon cancer, and we paid out his trauma claim of $46,350, and we paid that out within 10 days. So this is what Jeffrey said at the time of his claim. He said, "I believe risk insurance is very important overall. People think when it comes to life insurance that it's just going to pay out the mortgage, but I think the trauma benefit is just as important or even more important. With medicine these days, you might not pass away from some of these illnesses and you might have to live with them for years. So having a financial backup in those circumstances is really important." So over the 2020 year and 2021 year, we did quite a few surveys of our clients to find out exactly what their experiences were around life insurance and trauma insurance before they were taking out their mortgage and during that process. So what we found is that 23%, or less than a quarter of customers, had searched online for life insurance before taking out their mortgage. 1 in 3 strongly agreed with the statement that I'd not considered the risks of not having insurance until my broker mentioned them. This is a really important stat. 98% thought that it was very or fairly reasonable that their brokers offered mortgage protection when they took out their mortgages. 83% thought the offer was reasonable because it was a benefit to them or it was the right thing to do, and that it was common sense to be offered mortgage protection as part of taking out their mortgage. So you guys are having a really important interaction with their clients when they're incurring a lot of debt. So it just makes sense that during that process, you talk to them about a product that can potentially protect them against any sort of financial difficulties that may come around if they suffer a serious illness. So moving right along to what mortgage protection is. I know some of you may be new to the broking industry and you haven't seen or heard of us before. So mortgage protection is optional. Basically, it's an optional insurance which may help protect the client from financial impact of a serious health event. It's not lender's mortgage insurance. Mortgage protection benefits are paid to the client, not the lender. The policy provides a package of 3 main benefits. So death and terminal illness benefit, a trauma benefit to cover cancer, heart attack, stroke, and a specified injury benefit to cover clients in the event that they break bones and they're off work for a certain amount of time. The default cover is the loan amount up to a maximum of $1 million. So for example, if you're writing a loan for $500,000, you can offer mortgage protection insurance up to the level of $500,000. But the maximum amount that we can insure is $1 million and the minimum amount is $100,000. The first 30 days of the cover are complimentary. So the client does not have to pay their first premium for 30 days. They can pay it either fortnightly, monthly, or weekly, depending on their circumstances. So if you're not yet authorised with ALI, and I know that quite a few of you on this call will be, it's very easy to do. You just go to our website, you effectively register your interest. One of our representatives will have a quick chat to you. You then complete an online application form, which takes about 5 minutes. You then do a 30-minute online test, which is really quick and quite simple. And then you spend 90 minutes with your BDM, either via Zoom at the moment, or hopefully face-to-face in the very near future. And that completes your authorization process and you're up and running. So if you have any questions, because I know we've got limited time, there are my details. Steve's details are there as well. You can find us really easy on the website. There are 5 BDMs in Victoria and Tasmania. So please feel free to get in contact and have a chat if you would like to ask any questions. And of course, the most important part, the general disclaimer at the end. Thanks, Brett, and thanks to everyone for having me along this morning. And if you've got any questions, please get in touch. Thanks again.
Yeah, look, thanks, Matt. Look, I think it's a no-brainer. You know, mortgage protection insurance is something that, you know, anyone who's taken out the biggest financial decision of their life, you know, you don't want to get stuck with a debt that, you know, as a result of no fault of your own through sickness and illness, particularly now through potential aspects with COVID and flow-on effects of that to your health. I think it's a great idea, Matt, and I think it's a well worth service that all of our members should seriously consider becoming members and brokers for, and offering at least the choice for your clients to take up this great product. So thanks, Matt. Thanks for supporting us. Well done.
Pleasure. Thanks, Brett.
Next up to present, I'd like to welcome Nicolette Spicer from Assure Counselling, who will be presenting a great topic around our wellbeing at the moment, you know, building resilience and offering practical help with Assure. So in this time and age, I think it's a great opportunity. And Nicolette, welcome aboard.
Thank you, Brett. Excellent introduction there. It's true. I think lots of us have had a shocking 18 months, if I'm honest. So we provide free confidential counselling through Suncorp. It's funded by Suncorp, and it's available to all advisors, brokers and family members. And I think last year, with the services that we provide, anxiety was off the chart. And we're in 2021 and there was hope that things would have died down. And unfortunately, we can see so many of you are in lockdown. My heart goes out to you. If you are struggling or having a hard time listening to sad stories, watching the news, and it's affecting you, I want you to be able to reach out for support. So I'm going to spend the next 5 minutes talking about what is available, plus a couple of little feel-good tips to help you. Now, just bear with me while I share my screen. Won't be a moment. You're also welcome to take yourself off mute and ask me a question too. More than happy to help there. Rightio. Okay, so basically this is advisor assistance, free, confidential. Important that everybody on this call realises that half of us are going to suffer some form of mental ill health in our life. This year in particular, maybe 20%, probably more. I mean, we're finding, to be honest, lots of people are just suffering in silence. If that's you, I want you to be able to reach out for support. We look after 700 companies. We've got about 1.5 million individuals that we take care of. And I'll explain mental health in a minute. But just so you know, it is okay to not be okay. What's really important is that you feel comfortable and confident enough to reach out so that we can help you. Next week, we're celebrating Are You OK Day, best day on the Australian calendar. And I know FBAA have got a beautiful event, so hopefully everyone is participating in that. mental health, it's on a continuum. Some of us will be absolutely struggling, having a really hard time. Lots of you can pull yourselves out of those times, but many can't. That's where this confidential counselling comes into play. It's with qualified psychologists. It's 24/7. The sessions are paid for. It's free. It's confidential. It's excellent being able to get things off your chest, whether it be workplace, personal, family concerns, grief and loss, anything. Absolutely there for you. So when it comes to languishing, which is down at that -5, it's things like being absolutely exhausted, feeling lonely, feeling overwhelmed, sluggish, stale. Geez, you know, it could have been me yesterday if I'm honest. Unexpected sadness for no particular reason at all. Up the other end of the continuum, where you're flourishing, you're killing it, going beautifully, eating the right food, exercising, feeling really happy, to know that it's okay to be able to fluctuate on this continuum. We are here to support anyone who's either languishing or just feeling, as they call it, meh. So if that's you, or if it's a family member, please know that we've got solutions available. Got the counselling, I'll talk about the entitlements in a minute, but sometimes it's just taking stock of where we're at today, reflecting to understand, you know, how am I going today? Am I stressed? Am I overwhelmed? Am I feeling sad or stale? There's a couple of things that each of us, including me, the proud health promoter, can do every single day. Trying to get a really good night's sleep. So when we talk about sleep, think about, you know, is your room conducive to getting a good night's sleep? It needs to be dark. It needs to be quiet. It needs to be at a really good temperature. Don't be watching telly in bed or scrolling through Instagram before you go to bed. Make time, 15, 20 minutes, to really relax with a little bit of mood lighting, maybe a nice lamp. I'm not suggesting that you get a silk eye mask. Some people have said it's helpful. I don't know. Make sure that you have a routine every night. You're trying to get to bed at the same time every night and pay it forward so that you can get up early and get going with some exercise the next day. So for exercise, you know, doesn't suit everybody, but is a good recommendation to get up at an early time, get going with a little bit of huff and puff activity, whatever that means for you, bit of cardio, walking, running, jogging, lifting some heavy things, maybe doing stretching, maybe connecting in with someone who you will keep you accountable to get going in that way. We need to be able to do a little bit of exercise. 20 to 30 minutes is all we're recommending every single day. Being able to master a new skill. So for those guys in lockdown, thinking of something random that you can set your mind towards that you can master. Maybe it's learning a new dance to a TikTok. Maybe it's learning to cook chicken cacciatore beautifully from scratch. Maybe it's learning to juggle. You know, whatever it is, maybe, I don't know, learn the words to a new song, something different for you to focus on that's going to give you joy, that you can do with a family member or flatmate or whoever it is that you live with, that is going to lift you up. Just something to focus on, being able to master something outside of the norm, which can help provide positive vibes. Diet, as you all know, every time I come on these calls, I always smash everyone about your two pieces of fruit, 5 veggies, healthy snacks, lots of water. I guarantee you, if you put rubbish food in, you end up feeling like rubbish. And if you need assistance with any of this, our psychologists and health coaches can help you. Learning to relax. So we've got to do a bit of exercise. We've got to eat the right foods. We need to make time to relax as well. Maybe it's burning a candle, doing some deep diaphragmatic breathing, having a bath if you've got one and you find that relaxing. Just some good solid time on self-care, and put away your phones, put away things that are going to distract you. None of that helps. Support. Free confidential counselling with our psychologist. We've got 1,200 on the book, so we've absolutely got someone that can help you. 4 sessions of free counselling, 4 sessions of positive wellbeing coaching to help you set goals, dust off things that are holding you back. Maybe you need to reframe your mindset and look upon things more favourably. Also 1 session of legal advice if that's holding you back too. To get in touch, it's a simple number that you need to call, 1800 808 374. You can also get online and request an appointment that way. We're here for you. Please don't suffer in silence. Thanks for having me.
Thanks, Nicolette. That's really great. And I think you made a point about, this time that we are all suffering. Mental health is an issue for all people at all ages and all all work environments, and of course we are feeling the effect of it, going from being a very much a face-to-face environment to being an isolated online environment. So I do encourage you all to register for next week's Are You OK Day. That's on the 9th of September. You should have all received the flyers and the memos. If not, I'll get May to put it in the notes and comments section. So remember, reach out, ask for help, talk to people. It's not embarrassing if you're struggling, to just say, help me. It's actually a very strong, positive thing for you all to do for yourselves. So, and I'm here if anybody wants to have a friendly face to talk to as well. So thanks, Nicolette, really appreciate that. Next, I'd like to introduce and welcome Trent Carter from Accendo Finance, who's going to be having a good chat to us today around 5 key areas that every broker should understand to build value and trust with their SME clients. So Trent, all the way from Freedom Land over in WA, welcome to Lockdown World.
Thank you very much, mate. And yeah, I feel a bit privileged, and I never know quite what to say to the poor eastern states who have endured months and months and months of lockdown. It always feels a bit patronising when I say I feel for you. So, but I genuinely do, because it must be horrible, and we love getting over to the East Coast to do these type of things face to face. So, but here we are. I'm here virtually anyway. So look, welcome guys, and yeah, today I want to talk you through the 5 key areas to boost your SME relationships, and a little bit about Accendo to kick off, if I can, if it will let me. There we go. There we go. So Accendo Financial was created over the last, well, really it's been about an 18-month journey, but we've officially been open for business over the last 12 months. And there might be some familiar faces in there from things like the SME Bootcamp that's run before, and any of our short course programs such as commercial lending skills or mastering cash flow. You might have seen John or Stuart. You may not have come across me. My history is I am a broker. I have been a broker for the better part of the last 10 years. I've built up a practice that's SME focused, and that's not to say we're a commercial lending practice. We're a SME focused practice. It doesn't matter if you've got a home loan, asset finance, commercial loan. We understand our SME clients, and there was a fortuitous meeting of minds that we said that this is a really area that we're all passionate about. And we wanted to do more in helping brokers to understand this area and how to be SME focused as well. So we get told a lot at the moment about diversification, and we get sold that it's easy and it will have more income, and certainly those things. But the reality is that the spot and refer model is not a high profit model, that you need to invest in your business systems and processes. You need to invest in yourself. And in doing that, it can distract from your primary income source if you're not serious about it. You know, we're big proponents of diversification when it's done right. You know, that the broker approaches this when they consider it to be an investment. It can do all sorts of things like de-risk your business. You know, it ring fences your client relationships. It moves you into an area that is not as competitive, that it's got emerging needs in terms of SME. You know, one of the biggest areas of feedback we get from actual SMEs when we're talking to them about finance is they feel like they're in a bit of a black hole with their banking. Their banker has changed probably 15 times in the last 12 months. It's the revolving door there. And their home loan broker traditionally has just looked after their home loan, or they've got 2 or 3 relationships depending on what product they're looking for. So we want brokers to consider doing diversification right, which does require some investment, but the outcomes are fantastic. When dealing with SME owners, it's important that you understand that we're dealing with their most important asset. This is their livelihood, this is their income, their personal brand, it's their reputation, it's their future. So they're only going to deal with brokers that they trust. So we want to make sure that we're helping brokers on that journey to deliver that trust. And trust is really only comes when you're a competent SME broker. That comes from your capability set, that's your own personal skill sets. That requires some investment, some time to understand what the client's business is about and how the cash flows flow through that. And then it comes down to your capacity. It's your systems and processes in your business. It's embracing other technologies that are out there in the marketplace, like the guys that lend, like your aggregator software. All that sort of stuff can come together to help you deliver capacity in your business, and overall that helps you build your confidence. But getting on to today, what we really want to tell you about today is how to talk to SME clients just deeper than profit and loss. I think as most brokers, no matter what area of broking you come from, whether it be commercial, asset finance or residential, we understand the profit and loss statement really relatively well. But there's a whole lot more going on inside the business in terms of being able to find cash and what the cash flows are, and being able to promote the right funding solutions that match cash flow. So what extensively I'm going to talk to you about is some boring stuff in terms of some key ratio analysis. And I know that can sound pretty droll, but it's important that we have an understanding about how these key ratios are formed, because the exciting part, the stuff that gives me a buzz when I'm working with my clients, is it's the stuff that makes the biggest changes in the business. It's the stuff that you can see that you're making a genuine impact to your business. It's not only providing the funding solution, but being able to show them how they can actually improve areas of your business. So first of all, we need to understand the working capital cycle of a business. And some of us might be familiar with this, some might not, but essentially every business has got a working capital cycle. It's how the money flows through the business. So if we think of your normal type, say wholesale type business, manufacturing business, they're going to buy some stock. That stock's going to sit on the shelf for a while. Then it's going to move through to manufactured into a product until they can sell it. They get to raise an invoice, it goes into an accounts receivable, and then they get to collect the money. All those stages take time, and all those stages represent time that money is locked away in the business. There's some variances to it in terms of if you're a retail business, for example, you're not going to raise an invoice, it's payment on delivery. And of course, work in progress businesses, you're not building anything, but you are doing work for clients, so that gets converted into work in progress. Brokers, we're a classic example of that. We have a lot of money tied up in our work in progress on the deals that sit on our desk. So where's the first area I like to work with clients when I'm working with an SME client? It's debtors. It's the money that they should be collecting. I find that most businesses will have some quick wins that we can work away in here. But to do that, I need to get it in a format that the client's going to understand rather than just a debtor number. And that's debtor days. So how do we calculate that, or what is it? It's the time taken from the time that you issue an invoice to when you actually get paid for that. How do you calculate it? Well, it's your trade receivables, accounts receivables, debtors, they're all the same thing, and you find that as a current asset on your balance sheet. So you get the two financial reports when you're looking at the financials given to you by the client, the profit and loss and the balance sheet. We want you to do a little bit of work on the balance sheet, find the current assets and look for items like trade receivables, account receivables, debtors. Then you're going to look at the sales and you're going to divide the receivables by sales, and then we're going to times that by 360. Why not 365? You say, well, at the end of the day, everyone takes Easter off, I suppose. So we want to make sure that you're building in a realistic ratio for them. How this looks like for a business, and this is an actual business that I've worked on, I based this case study on, they're a plumbing business. They had an accounts receivable, they had invoices outstanding of $86,000 for the period. There was a 12-month period. They had $420,000 in sales for that same period, which meant that the average collection time was 74 days using that formula. So when I was talking to the client, they sort of said, yeah, 74 days, so what? Then we had a conversation about what if that could just change by 1 day? The impact of 1 day is $1,150 in cash. Now, this business at the time was coming to us because they were short on working capital and needed funds, and they were looking at around a $50,000 overdraft. So we actually talked about things that they could do to save time on their debtor day collections, the time that they're actually taking to collect it. And they set themselves a goal over 2 years to reduce that down to about 45-day trading terms, which if you do the calculation, it's a 29-day multiple from where they were at 74. It's $33,000 in cash that they could unlock in their business. And they were asking us for a $50,000 overdraft. So you say as a broker, I might be doing the wrong job in terms of I'm now selling less money potentially down the track, but it's the right job because the relationship outcomes now, these clients trust us with everything that they do. How do we get them to do that? We got them to focus on a few parts of their business just by focusing on debtor days. Simply requesting a part payment up front. When they started a job, they now got a 10-15% deposit up front. They shortened their due date and their invoices. They were just relying on a 90-day invoice term that came out as a stock standard thing on their invoice and never actually even thought about it. We got them to reduce that down to 30 days, which means they did have some late payers. They got that down to 45 days, as I said, over 2 years by doing these changes. We also got them to put in a process that someone picked up the phone and said, oh, your invoice is coming up due, just the day or the week before the invoice was due. got them to follow up all their late payers, and they put some payment solutions in their business that made them easy to pay. So many times we see businesses that they've only got one option to pay in terms of being a direct transfer to their account. A lot of other businesses want to be able to use credit cards, have payment plans, do those type of things. The next stage that we worked through the same client was with creditors. So Creditor Days is obviously the opposite. It's the time taken to pay for goods and services that you used in generating income. It's the variable expenses. You can find these as cost of goods sold, excuse me, on your profit and loss sheet. That's all your variable expenses that you have associated in the business, or the business owner has associated in their business to generating that income, generating that top line sales. Then they've got their trade payables, accounts payable, creditors, all the same thing, and they're found as a current liability in the balance sheet. So the formula to calculate your creditor days for your clients is your payables divided by your cost of goods sold, and then times that number by 360, and you'll get your creditor days. So what if in this same situation, they were just being able to stretch, there's one less, it should say stretch by one more day. So their accounts payable is $55,000. Their cost of goods sold was nearly $290,000. They had an average creditor turn of 69 days. They were paying everyone in 69 days. Now, the immediate discussion was that we had was, are your suppliers okay with that? It turned out that most of their key suppliers had much bigger clients than they were on 90-day terms. So they were looking at seeing if they could actually stretch out their payment terms. So by being able to stretch out their payment terms by 1 day, it's an extra nearly $800 in their business. Now, this business, they actually managed to stretch it out by 11 days, took it out to about 80 days all up. And that was an extra $8,000 a year in their business. So the combination of working on their debtors and the working on their creditors, they've now found nearly over $40,000 in cash that they didn't have access to in their business. It's not changing their net profit situation. It's actually just the cash flow in their business that you would use an overdraft traditionally for. So how did we get them to do it? Simple one was paying on the due date. These guys were the classic example of using a business. As soon as the invoice came in, they'd pay it just to get it off the desk and get rid of the paperwork. They didn't schedule it to pay it in 30, 60, 90 days. Whatever term they were given by their supplier, they were paying all their money out as soon as the invoice came in, but yet waiting all that time to collect their own invoices. They actually asked for some discounts on early payments. They asked for longer time to pay from their key suppliers and got it. They actually broadened their supplier panel too. One of them was, probably not playing ball, but they weren't the only dog in show, and they were able to negotiate a better deal with a competitor of that supplier and moved some of their business over to them. So they also looked at some strategic preferred supplier arrangements. So these guys actually were able to, not with one of their key suppliers for some of their plumbing equipment, weren't able to negotiate better terms, but what they were able to negotiate were some rebates in terms of advertising and also some training arrangements. So they actually saved money elsewhere in their business by being able to work with their suppliers. So they're just being smart around how they're using their money and their relationships. The other key area of that working capital cycle is, of course, your stock days. This is the time that basically your inventory sits on the shelf until it turns into money, into sales. So to calculate that, it's your stock. Again, that's a current asset found on your balance sheet, and a cost of goods sold. That's sitting on your profit and loss. Divide that, your inventory by your cost of goods sold, times that by 360, and you're going to be able to calculate your client's stock days. So what if they were actually able to turn their stock over 1 day less? Well, they had stock of 142, divided that by their COGS, and they end up with 177 days that they were hanging on to their stock before they actually turned any of that into cash. Now, for a plumbing business, that was actually quite a long time, and it's turned out it was probably just a little bit of laziness in being able to manage that when you actually had the conversation around the numbers with the owner. 1 day change was, again, nearly $800 for them. So for them, they managed to get their stock turned down by 87 days. Now, that was a massive impact. That was nearly $70,000 cash locked in that business over 12 months, just by virtue of them being conscious about what they're buying and not buying the same stuff again because they forgot that it's sitting in a shed out the back. So areas we got them to focus on was actually starting off with the stock take. Get to know what's on the shelf. They had some high volume products. They needed to hold more of those. They had some really low volume stuff. They actually moved that to just-in-time ordering. So rather than holding stuff that you might use once or twice a year, they actually just told their clients, look, that job will start a week later because we need to order it. And because it is that higher value stuff, most clients were prepared to wait. It wasn't an emergency. And they got rid of their old stock. They actually went through and did all the stuff that they needed to get rid of. They just discounted it, got it out to their clients at a loss. Well, not a loss that they were purchased, but at the end of the day, they're cutting their losses because the more time it sat on that shelf, the more cash it was going to lock into that business. They also did some reviews with minimum quantities. They were stuck in a bit of a habit of getting the supplier to dictate the terms on what they were buying things. The supplier was pretty good at managing their stock and offering some pretty good discounts for them to buy more. They saw it as a deal, bought more, but they bought more than what they needed. So they weighed up the value of the discount versus actually having to hold that stock in the business, and they were better off not taking the discount and just ordering what they needed. These guys, not so much, because they were a plumbing business and they sort of sold the parts they needed when they went and did the job. But for retail businesses, the worthwhile point is the presentation of stock. If you ever walk into a retail business and things are dusty or cruddy, or the clothes are all crumpled up on the bench and you can't easily see the stock that you want to buy, it's not going to sell well. So having some pride in the presentation of the stock that the businesses have, and you get to see these things, when you actually get to walk back into businesses and you see how things are presented. Great businesses take great pride in how they present their goods to sell. Really important comment here is on stock, but converting that to work in progress is for service businesses, is that I sort of alluded to at the start, brokers, we're really guilty of this, is that we can leave deals sitting on our desk for a really long time, and we don't actually get to influence our debtor days that well. We can't tell the lender to pay us any faster, and you get paid by your aggregator when you get paid generally. The biggest thing that we can influence to unlock cash in our own business as brokers is your work in progress. So it comes down, A, are you hustling? B, your systems and processes, your education around things to be able to turn deals into, a approval quicker, and approval turns into a settlement quicker. All these things are our work in progress and where working capital gets locked up. One of the final areas that we'll look at is overheads. Now, these are your fixed costs of the business. These are things that rock up every single day when the doors open. It doesn't matter, the lights will turn on, the wages need to be paid, the insurance needs to be paid. All these things are just expenses that exist whether we sell a dollar or don't. And what we find is that over time we get a creep of these expenses. The longer you're in business, the more things that we tend to add on as a service, and some of these things become luxuries and not required. So we encourage all our clients to review their operating expenses at least annually, or if there's a significant change in the business, good or bad. Sometimes there's negative change where sales drop. Naturally, you're going to review your expenses, but it's equally as important to make sure that when you're growing, that you're doing it in a lean way and you're not, putting excess money into areas that you don't need to. But the objective is to be lean and not mean. I've seen too many times businesses cut the cloth too fine, and it turns it into a pretty sad place to work for, and it demotivates staff. It makes it a bit hard to operate your business as you will. It puts extra stress on the business owners as they need to do more of the jobs because they're not outsourcing or employing that person. So there's a fine balance between cutting the cloth and being efficient. When undertaking the review, I encourage my clients to ask 3 questions. Do I need this for my business? This one's the do not pass go question. Go every time you pay an invoice, pick it up and go, do I actually use this in my business? Now, for us, we were using some software and it was outdated. We never used it, but we didn't realize we were paying the license for an extra 3 months before, and we realized that no one had touched it for that time. So it didn't get a yes, we got rid of it. Do I need the level of the product? Software is another great one for this. In fact, us was a mobile phone contract, again, reflecting on our own business when we did this. We had someone leave our business. We had a mobile phone contract attached to them. It was sitting in a drawer. We had forgot about it. And then all of a sudden we pick it up and go, actually, we don't need that many mobile phones. So we reviewed it and reduced our plan down, reduced our overheads in the process. Obviously, if you do need the level of product service, or you can rationalize that, the last question to ask is, are there alternatives or substitutions? Can it be shopped around? Mobile phones, insurances, stationery suppliers, utility providers, if it's gas and electricity in certain states. You can go and shop these deals around, and they should be shopped. There is no cost of loyalty anymore. We should know that as best as anyone, as brokers. We encourage our clients to shop their banking around. It's an attitude that they should take in every aspect of their business, and even we should take it aspect into our business. Funding cash flow. So going through doing those reviews, calculating their debtor days, calculating their creditor days, the stock turn, overheads, we're going to come up sometimes where there's going to be shortfalls in cash, and that needs to be funded appropriately. There's a myriad of options out there, and I'm not going to go through this slide but line by line. What it is to tell you is that there's a lot of options, and sometimes clients get locked into a product of what their bank can offer because they don't offer the full scope and the breadth and width. And this is where we can use our funding partners to actually be able to expand their thinking. So, for example, the client that I was talking to you about, they wanted an overdraft facility initially of $50,000. They needed some cash while they made those changes. The changes weren't instant. It took time to implement them and get that cash unlocked in the business. So we actually put them in to a Finstro facility, funnily enough, and it was also because they could access the debtor and trade finance in one line rather than their bank, who was prepared to give them an overdraft. And the danger of that is these guys weren't the best money managers to start with, and you're going to end up with core debt. And I would have been there in 6-12 months refinancing that core debt out as term debt, making the problem bigger. So it's about being smart, thinking about what end of the cycle you are funding and applying the right product. Lend, for example, great platform. They're going to be able to match the products for that. Get the right products through there with guys like Finstro. You know, there's a lot of options out there. It doesn't just need to be that you need to go to a big four and get them an overdraft to fund cash flow. So the case study for this is another one. Is a contractor payments that they had them at the start of the month, but their income was not due at the back end of the month, which is pretty typical of what you see of a lot of businesses. You know, they've got to pay out their wages still, they've got to pay their BAS, they've got to do these things over time. And what we noticed through doing these calculations for them is that there was a regular $10,000 gap of about 15 days each month for them. What they were doing, rather than having funding available for it, is they were stretching out their supplier payments. So they were losing their discounts. So a lot of the suppliers would actually give them a discount to pay on time or before the invoice time. They were losing all those discounts. They were using the ATO and GST to fund their business, so that it's not your money, you're just a holding agent for that. So they're effectively creating themselves a tax debt, which we see a lot. They're delaying payment to their contractors, which ultimately was eroding trust with their team, and it was getting harder for them to get the good guys to keep coming back to the job. And ultimately, they weren't paying themselves, which defeats the absolute purpose of being in business. That, you know, no one wants to buy a job or buy a problem, and they were getting paid last. So what we did is we put a line of credit in the solution. So this one, they could access the debtor finance, they could access the trade finance. The cost was 2% a month, and the client took a big backward step and went, that's 24, did the immediate sums in his head, and that's 24% interest a year. And the answer is yes, if you allow core debt to build up in. But when we broke it down to them and said, you need access for 10 grand at 2%, which is $200 a month, or actually for the 15 days you need it, it's $100. Would you pay $100 to get access to 10 grand to solve all those other problems in your business? And it was a resounding yes. So the conversation came away from rate, but the solution became the driver of the conversation for the client. So I'm more than happy to get access to that. Then we did more than just actually provide them the funding. We thought about their cash flow cycle, all the stuff I've talked to you about today, the debtor days, the creditor arrangements, their stock turns, even got them to do that overhead expense review. And one of the key wins out of that is they actually negotiated with a client to go cash on delivery, but negotiated a sizable discount at 5% on one of their biggest suppliers, so 10K purchase. So it's $500 is the discount. The cost of funds to borrow those funds was $200. We effectively saved them $300 by funding that solution. So it's more than just the funding, it's understanding the cash flow solution, the interplay between that, and knowing that how you can actually get the business to fund itself. I'll take a quick opportunity to take questions, but I know that I am running, so I give everyone the opportunity at the end of this slide. I've got my email address. If you've got any particular questions, feel free to drop me a line and I'll get back to you as soon as I possibly can. So unless there's any particular questions this instant. Brett, are you seeing any pop up on screen?
Nothing popped up on my mail, but I do think it's great. I think the things that you talk about there is not only for our in consumer SME business, but for all you brokers, particularly like Trent, where you talk about loyalty is gone, right? Customer loyalty, we as brokers do promote, shop around, but so many of us fail to do the same basic things for our own businesses. So I think it's a great learning for all of us here, that to look at those things both in your own business as well as your own personal life. Look at your home utilities, look at your mobile phone bill, look at your car insurance, all of those sorts of things. So I know for one, I just did it on my electricity, had a really bad bill shock over winter, being everybody at home with heaters and computers and everything on, and I've switched to a new provider that's 30% less than my current one, who I've been with for 5 years. So it's a great thing, Trent. Well done.
Spot on. And look, and think about it with your clients too, is that ultimately you can use these savings to pay for the solution you're putting in front of them, which ultimately you're doing your job right, if that's the whole deal of it.
Yeah.
I've got a question. Can you get a copy of the presentation? Of course you can. I'm sure Mariah will be able to get that out, or you can email me and I'll be able to get you a copy as well.
All right, perfect. Thanks, Trent. Thanks for zooming through and getting us back onto track, mate. Always entrusting you to do that.
No worries. I will just quickly race through to, so you can see. Look, if you want to know more about us, we've got accendo.com, accendofin.com.au. If you want a free guide, I've got a free guide that you can actually, it's structured in 6 emails that you can send out to your clients. So it's got all that information about those hints and tips and checklists on what you can do inside their businesses. Great value. Flick me an email or any of your questions and I'm more than happy to answer it. Also, a big thank you to Finstro, who's obviously our partner for this. And, they're one of the guys in the working capital space that I think are doing it right with their working capital and payment solutions.
Fantastic. Thanks, Trent. Really appreciate it.
Thank you.
So building more on the SME topic, I want to now introduce Matt Peacey from FundTap, who's going to present to us. Oh, no, that's not Matt. That's Trent still on the screen. It's Matt's the next one. Matt is going to be presenting. There he is. Is going to be presenting Invoice Finance, but for SMEs. So Matt, over to you.
Thanks very much. I'll just get my presentation up and running. Here we go. Awesome. So thanks very much. This is the first time we've sort of been here, so I just wanted to quickly run through what FundTap is, what we do. And so it was a great introduction, I guess, with Trent all around the SME sort of space. That's exactly what we're looking for, and it's trying to solve that cash flow hurdle for them. So it's really looking at invoice finance, debtor finance, factoring, but specifically for SMEs, because they've been traditionally underserved. It's a great product, but it hasn't really been, hasn't worked very well for SMEs in the past, and so that's what we're trying to fix. So let's see if I can get this going. And so I won't spend much on this because I think Trent gave a really good rundown on the importance of cash flow, how to fix it, how to start looking at it. But it is the biggest reason that companies fail. So it's American data, but I think 82% of companies that failed said it was cash flow that was the #1 reason. So it's hugely important. And again, I won't go through this too much. I mean, there's a myriad of different options in order to solve your cash flow issues. First one should probably be what again Trent was saying around looking at actually the fundamentals of the business, how you can actually sort of correct some of those as you go. But then there is a place for finance, and there's some pretty blunt tools, and there's also some tools, and this is where invoice financing can come in working really well around payment cycles. But again, it's got to be appropriate for the business that you've got. And so if we're looking at invoice finance, I mean, there's some really good advantages. Essentially, it's pulling forward, it's unlocking all that, I guess, those debtors, and it's pulling forward funding as they need. So it's an extra lot of funding sort of sitting there. It's repaid when the debtor repays, so that timing cycle works really well, and it works really well for large and medium-sized businesses. Some of the disadvantages, and it's been sometimes known as the lender of last resort, and that's because there's sometimes some things that lock in people into using it over and over. It can be difficult to implement. One of the biggest issues is that in order to use it, it's sort of technical thing, but the debtor pays the invoice financier, and so have to go and pay that. You've got to change the bank account that the debtor is paying into, and that can be a real pain. Jumping in and out of invoice finance doesn't make it very easy, and a lot of people don't like doing that because their clients know that some sort of invoice financier is involved. And so this is where we came from with FundTap, and so it was really looking at how can we actually go and use all the benefits of invoice finance, but specifically for small businesses. And so we went and built it from the ground up, took advantage of all the technology. So, it links them with your Xero, your MYB, it pulls through all your invoices. It's pretty simple. We can have it approved within an hour, and we can have the money to them within minutes. one of the big advantages of us is there's no establishment fees, ongoing fees, anything like that. So it's a dip in, dip out. It's on demand. There's no need to, there's no worries about ongoing fees or the like. It's just used when you need and not when you don't. And one of the big advantages is there's no need for you to change the bank account that the debtor pays into. So for your clients, getting this across the line with your clients, that's usually the biggest impediment, is that they have to go and change the bank account that the debtors will pay into all the time. So there's no need for that. Instead, what we do is once they're repaid, we direct debit them at that point. So again, it's all automatic. It's really simple. It works really, really well for small businesses. And I guess that's what we're really looking for is that finance option for the cash flow. So it's those unexpected cash needs as they have, or it's that, I guess, that disconnect between having to pay, your clients having to pay all their people fortnightly, but it might be 30 or 60 days later that they're actually receiving all their money in. And so FundTap is an on-demand finance. They use it when they need and not when they don't. There's nothing locking them in. It sits on the shelf, it's ready to go, and it works really well on that aspect. And because of that, I mean, our clients just love us. They don't realise quite how easy it is, that it's a 5 to 10 minute sign-up process. We're pulling all the information automatically. They don't have to go and provide any information. We don't need any information from yourselves. And I guess it's just making sure that we're always looking after those clients. So those clients, we've got comments back saying, it's a pleasure doing business now. We can sleep at night. We don't have to worry about where that cash is coming from, because again, those unexpected expenses, all those cash flow holes, we're able to pretty easily fix. And so we are very much looking at that small business as a client. They've typically been very underserved. And again, what I guess Trent was saying, we all sort of know that for banking, they find it difficult to service these kind of clients. Even for brokers, it's difficult to service them because, they're relatively small. There's not a huge amount that's sort of coming out of there.
Yeah, so
someone else there. And I guess it's just leaving you here around our partner program. We offer commissions for the lifetime of the client as well. So, it's constantly coming back to yourself, but it's very low touch. I mean, it's as simple as joining our partner program, which is 5 minutes. We can set up a co-branded sign-up page. You just send your clients to them and then we handle it from there. We're always down the end of a phone. So if there's any questions from either the client or yourself, I mean, we're wholly online, but we want to spend our time talking to clients, talking to yourselves, making sure that you're happy, that you know what's happening, and that it works well for everyone. And so I guess that's just my final slide. In the short time we've got there, do get in touch with us if you're all curious. But really, it is it's all the benefits of Invoice Finance, but working for small businesses. So if you've got those small businesses that are looking for that kind of arrangement, then I guess we're able to well service them. And that QR code will just take you to our partners page where you can go and sign up. But appreciate it, really. Thanks very much for the time, and hopefully that wasn't too long. Cheers.
No, Matt, it wasn't too long. It was right on time. So look, great product there at FundTap. Matt, welcome aboard. Hope to see you in a lot more of these sessions. Actually, no, I don't hope to see you in a lot more of them. I hope to see you on the face-to-face ones in future. So thanks for participating today. So next, I'd like to welcome back a regular face who's been here a few times, Lee Sumerkis from Prosper. I always get Lee's surname wrong. I shouldn't, because I'm married to a Greek, so I should say it. Who's going to be outlining continuing to help small businesses in challenging times. I do it every time, don't I, Lee?
Thanks, Brett. You do, buddy, but that's okay. I've been called a lot worse, mate. And just a fun fact, mate. Back playing soccer back in the days down in Queensland, my surname, I've got my nickname Chuku because a ground announcer couldn't pronounce Sumerkis and pronounced it as Chukamerkis. And the team all decided to laugh at me at my expense. And I've been Chuku ever since, I think, 1987 or something like that, something crazy. So,
well, welcome back, mate. It's good to see you.
Thanks, mate. Thank you. And appreciate everyone and your time, Brett, and everyone at FBAA for putting this together. In what is absolutely a crazy time we're still living in. Who would have thought a year and a half later we're still doing the same thing? I'm just sharing my screen, ladies and gentlemen. Hopefully. All right. Thank you. Just get this out. So, yeah, going into what Brett was just mentioning, guys, from a point of view of where Prosper sits right now, and I know Danielle was mentioning about, you know, business lenders out there like ourselves. We are still lending, which is great. And come on, there you go. So, and we have been, and you know, if for those of you probably, you know, looking at some articles out there, Prosper, the last, well, FY21 results came out very, very strong, and that's a credit to not only small businesses out there knowing that there's alternative funders like ourselves out there, but it's you know, it's all down to our partners, the brokers, you guys out there that have been referring all this business through to us. So, so we thank you for your support, and we thank you for choosing us as your lender of choice on most occasions, and you know, and trusting us with your small with SME clients out there. Obviously, we don't have too much time. We just sort of wanted to go into sort of the opportunity, I guess, from our point of view, guys. And it's funny, sometimes I'll go through, and when we were able to catch up with some people, I'd put this, you know, well, I'd always ask, how many small businesses do you think are out there in Australia? And it's funny, a lot of people didn't really know. And then you know, sort of break it down, and you'd ask how many small businesses are in Victoria, and likewise, and so forth. But here is a map of Australia and the small business in Australia. So there's just over 2.2 million small businesses in Australia. In Victoria, there's 600,000. And I urge, I think there's 100 people on this call, and I know we all go right now in Victoria, you use your 5-kilometre radius, and I've probably spent more money at coffee shops in the mornings between 6:30 and 7:30 in the morning than I've ever before. You know, you get to know people, and, you know, just reaching out as you walk around, people always ask, what do you do? How's work? Are you working? And all that kind of jazz. And it's amazing that, you know, how many times in this last probably month I've actually spoken to a cafe owner who's come to me a week or later saying, hey, can you talk to me a little bit more about Prosper? So the opportunities are endless out there for all brokers to help small businesses. And that's where I think I'm sort of just reaching out to everyone out there. We know we're doing it tough. The impacts are still strong. You know, we probably talked about these numbers probably for the last 6 months, but nothing's really changed. There's so many small businesses out there that have been impacted. There are some that have been impacted in a positive way, and we find that those small businesses are coming through to us for opportunities. And so we're there not only to help businesses survive, but we're also there to help them thrive. There's some notes from the last couple of months. So, you know, for those of you who might have shares, you might have read a little bit about our co-founder, Bo Bertoli, mentioning about how proud we are of supporting small businesses out there and helping them recover. And as I mentioned before, it's not only about helping them recover, but it's also about them taking hold of new opportunities and even growing and expanding their operations during these times of uncertainty. Confidence was building. We probably took a little hit in August, and it wasn't about, we still had record numbers of, you know, in the sense of going back pre-COVID numbers, but we have witnessed that many small businesses, you know, now are still picking themselves up to focus on recovery and growth. But we're sort of finding that they're stagnated a little bit the last couple of weeks, where people are going, shivers, I might need it, but I might not. Let's just wait. We also know that over 90% of SMEs are expected to recover within the next 2 to 3 years. So, you know, with that, and obviously we have seen a steady increase in appetite for lending. So our broker partners, you guys, have been working, you know, tirelessly to champion small businesses and collaborate with us to find the solutions that fit their need. I've heard of a bit today about, you know, just finding the right needs for their clients, for your clients. This is what we're all about. We've got our small business loan, which we're there to probably help grow the business, and then we've got the line of credit, which a lot of clients out there are using to help run their business. We still know, and research is indicating that one in 4 SMEs intend to take up funding, right? SMEs sitting on approvals or waiting for the next steps for this lockdown is probably where we're at right now. And I'm not sure if it's the same with everyone else, but that's sort of that's what we sort of saw last week, especially in Victoria. But just for some numbers, so from a point of view, in July, August, we had 4,000 leads come through our business, over 1,000 applications. The one thing that we're seeing is that average deal size is definitely growing. Now, that could be for a number of reasons. Yes, we do, you know, probably 12 months ago, 24 months ago, our average deal term was maybe 12 months. Now we've got the 24 and 36 month terms as well coming through. So a couple of things there. You just from this trade, these come through just obviously today, so haven't got the beautiful metrics and photos, but still, and probably for the last 7 months, building and trade has been our top industry. So the majority or 30% of all those leads that came through were building and trade. Now that's from, obviously all kind of tradies, business builders, and what you have. So just so you know out there, if you have got builders and people in the building and trade, they are looking for funds, okay? We also know that trading terms have definitely changed. So gone from 30, 60, 90 days to maybe even, to cash on delivery, or even now cash on pre-delivery. So that's what we're seeing right now. Professional services, hospitality and retail have definitely declined, but we are still lending. Interesting to see there the settlements by state. So these are the referrals, these are the SMEs coming to us for loans. So the majority this time, 22% of those leads came through were from Queensland. Small businesses looking for some funds. New South Wales is 18. It's funny that stat 2 months ago, New South Wales was above 25%. Vic and Queensland were in the high teens. So, have a think about, and the reason I put this out there is because if you want to diversify, there is opportunity. Don't just sort of sit back, and think about, oh, maybe I can't help the Victorian. I'm not, but maybe, we're there. We've got our marketing tools, which allow you to go out and spread your wings and go into the other market. So, and if at the end of this call, you'll have my details at the end, but feel free to reach out and how we can help you with that. From a point of view of what we're still looking for, nothing's really changed, which is great, even through this lockdown stuff. So clients got to be PR or Australian citizen. It's got to be an accepted or preferred industry. And you saw some of the industries that we are lending to right now. Nothing's changed in regards to minimum trading. Your SME or the business has to be operating for at least 6 months and must have an average turnover of at least 6 years. As always, we must have the business, the use of funds must be for business use. There's a couple of things that we ask your client if you do refer without giving us too much information, but these are the kind of things that we would ask yourselves to ask your clients during this lockdown. Is there any opportunities, or what challenges do they have? Going back to my conversations with the cafes that I go and visit, what challenges do they have right now? How are they managing their cash flow? So there's a couple of questions that you can ask, guys. Obviously you've got your own sort of probably questions, but these are the ones that we're sort of asking your clients if you refer us to them. Just to help out as well, we have got an initiative. Sorry, go back. Just to help out clients that are signing up with us now, we have got up to 4 weeks initial no repayment. So approved customers can elect to take an optional initial no repayment period between 1 to 4 weeks, which obviously will help. If here in Victoria, I don't know, I'm probably taking some of Premier Dan's time now, is usually on about this time, so he could be telling us what we would look to expect, but I can't, and we can't see us getting out of this probably for another month. So, hey, take the money now, make no repayments. Hopefully when you reopen, you'll be able to start making repayments. So little things like that. And then from a point of view, guys, just take a photo if you like of this. This is the team looks after the Victoria and Tasmanian brokers. Feel free to reach out with any questions. That's it from me, guys. Thanks, Jim.
Great, thanks, Lee. I love it when I hear nothing's changed, because if it's not broken, don't change it, right? So well done to you guys, you and the team at Prosper, mate. You're kicking goals, and it's great to see our members supporting you the way they are. And I'm not sure that Dan has been on yet, but I do know that school playgrounds are due to reopen, and that they are going to reduce the 5K zone. So it means we can walk a little bit further and visit a few more coffee shops, hopefully. So, but that is what they're saying on the socials. So thanks for that, mate. Now, next to join us is another repeat sponsor of ours, Cooper Shelich from Speedy Finance. He's going to be talking to us about how to use your private lending to take advantage of an opportunity. Probably a really good opportunity now for that. And so it's going to be quite pertinent to hear from Coop this morning. Welcome aboard again, Coop.
Yeah, thanks, Brett, and thanks everyone for joining me on the Zoom session today. So yeah, pretty much I'm going to just be chatting about how private lending can be used to take advantage of opportunity. I'll just share my screen quickly. So pretty much I'll keep it pretty short and sweet and jump into it now. As most of you are probably aware, private lending or private finance is funds provided by private individuals or private lending companies such as ours. Whilst the banks, specifically the major four, are biggest secured lenders in Australia, there's many transactions that don't really fit the big banks criteria, but are still very strong options financially for many Australian businesses. So these loans are typically secured by property, either being a first registered mortgage, second registered mortgage, or in some cases a caveat. Most lenders also have a few conditions, the main one being the LVR, so loan to value ratio, which usually acts as a credit limit of how much the client can borrow. Typically for us, we look at about 75% LVR as a normal loan, but have in some scenarios done a higher LVR up to 95%, even with a strong exit and strong business. We don't look for things like banking. You can be, 0 days in business. Don't look at ATO debt, things like that. The main three things we're looking for is the loan purpose, the loan exit, and the LVR. So the best way, in my opinion, to get to understanding how private lending can be used, I'll jump into three real life scenarios that we've had in the past and go through how the product benefited the client to take advantage of an opportunity for their business. So the first one, this is a pretty recent one. Even with COVID, we looked at doing this one. We had a broker come to us with a client looking to start up a Plus Fitness gym in Newcastle. The client had previously run a gym, had good history, great business plan, but was unable to get the money, obviously due to not trading, and his property is already at 75% LVR. Given his history running the business, we looked at a couple other things. We were able to offer him the funds to pay his franchise fees, capitalize it for 3 months. So he's in that currently. So he's going to spend the next 3 months kind of setting things up and everything like that, followed by paying interest month to month until such time his broker is going to look at refinancing him into a more traditional facility once he's trading and has a cash flow. The second scenario, this one was an interest only bridge. So we had a client looking to purchase a commercial warehouse. They had a 25% deposit, so we're doing 75% for him. The bank was taking their time to get the funds to him, but he knew what he wanted, and with the market how it is at the moment, things are getting just snapped up left, right, and centre. So he really needed that funds just to take advantage of purchasing the property. We're able to approve him, sign him up within 5 days of the initial inquiry. This gave him the funds to sit on and the peace of mind knowing that he could put an offer in on something and purchase it. This particular one, it was 2 months of interest-only payments until his finance come through, and then obviously at that point he paid us out and then had a more traditional type facility. The last scenario, this one was from a broker. We had a flooring company. He had 150K worth of receivables that he's waiting on, so he wanted a bit of a bridge. Additionally, he was also looking on the other end for some working capital because currently there's a bit of a shortage of materials in that particular industry, and I think across a few industries at the moment. And he really needs those materials on hand, so for him to take jobs on, if he didn't have the materials, he's going to lose them. So he really needed that cash behind him. So we set him up on an interest-only product. This allowed him to pay interest only until he either got paid from his debtors or completed jobs, and then just made lump sum payments against the loan at his own leisure over an 18-month period. So yeah, pretty quick one. That was the three scenarios. The main thing, I guess, that's three ways you can look at use private lending, but always come to me if you have a scenario, or if you have any questions, there's my details. But that pretty much sums it up.
Great, Coop. Love a quick presentation. Hence the quick presentation, speedy name. Well done. Great opportunity, guys. If you've not looked at private financing before, give Coop and the team at Speedy a call. They are great, and they've been serving our brokers for quite a while now. So look after the guys, and they'll look after you. So thanks a lot, Coop.
Thanks, Brett.
Now our final presenter today, someone new, friend of mine from up north in really hardcore lockdown area up there in Sydney. I'd like to welcome George Dibb from Anfin, who's going to be talking about and outlining how asset finance trends to capitalise on in 2021. Welcome aboard, George. Good to see you.
Good to see you too. It's been a while. One sec. Let me share my screen.
Through no fault of our own, I must say.
Yeah, you're not wrong. Can you see my screen? Is that all good?
And indeed.
Yeah, fantastic. It's been a while since I've done one of these. See you guys. Firstly, thank you FBAA and Brett for having me here today. This is our first year in sponsoring the FBAA. We've had a good and close relationship with you guys for a long time, and it's finally good to put pen to paper and work closely with you. Again, to everybody out there, especially across the states that are enduring lockdown right now, I hope you're all okay. I'm glad to see that you guys at the FBAA took initiative in discussing things around how we can help with mental health. I think that's really important. And I'd really love to get a haircut, as you can probably see. So I'm looking forward to that day. So guys, I'm going to keep it nice and short. If you don't know anything about AmFin was designed and built so that we could help referral sources, especially mortgage brokers and asset finance brokers, access more product and have a partner that will be there to work with those deals to ensure that there's a nice uniform approach, especially, you know, with all the things that happen within asset and SME finance. If you don't understand it, we're a great source and a great business to work with because we understand and we want to be able to partner with you guys. So I'm just going to go really into the stuff that we're seeing as far as, you know, right now, and even across the course of the last financial year as far as trends are concerned. So the first screen, again, topics to be covered, just a mini update into the state of the asset finance industry, a little bit about the assets that we finance, and just, again, I think I've done the intro to AmFin, just a little bit more after that. So in demand and state of the market, demand for vehicles is actually still quite high, which is great. You know, we want to look at the trends in the consumer lending space and the demand for business equipment as well. So vehicles, just to start there. Demand for vehicles continues to grow despite lockdowns. Now, understanding that there are stock issues around the globe, we're still finding that there is stock. It's just a matter about where to look for it. You know, understandably, there are states, again, like I said, Vic and New South Wales, they're currently in lockdown, but there are other states that you do have vehicles available, and it's just about making sure that, you know, you have someone that can assist you there from a car buying perspective to ensure that you help your customers out. The things that we're seeing, and it's probably in line with what, you know, the industries that are actually open, you know, utes, SUVs and light commercial vehicles dominate the market. I think that makes sense, especially with, you know, construction still very buoyant. You know, even then, you know, people are still buying property, especially new properties where they're building on. As a result of that, you can see that those are the vehicles. And demand for these vehicles is up 34% year on year. So again, even though we're locked down, 34% is still a genuine increase. So, you know, again, I'd implore any broker that's on here, if you're doing this and you're predominantly doing cars, start looking at other assets. Passenger vehicles experience a slight decline, but are still year on year up. Again, the decline is purely based where at home. You know, if you're talking about your normal car, run-of-the-mill, you know, for families and so forth, understandably, people are probably not hitting the button when it comes to buying a new vehicle. But again, it's still up. So, you know, when we're out of this, we expect that this will jump again. So you should see an increase and you should be prepared. And the other thing is as well is vehicle loan applications are up 16%. And, you know, even touching on what Lee said, they haven't changed, you know, their product and what they're doing as far as servicing the market. We've seen that pretty much across all of the asset finance lenders, you know, in comparison to where we were last year as far as, you know, the changes of in lending and how the guys were actually assessing. It's still business as usual, which is great. And look, you know, based on vaccination rates and based on when we should see, you know, even New South Wales and Melbourne and the other states getting out of the lockdown, again, I'd expect that we're going to see a genuine increase again. So consumer spending. So this is a really good one. So 29% increase in credit applications year on year. Personal, this is one which we've seen in our business specifically increase, and it's great to see, you know, from a stats perspective. Personal loan applications have surged by 61% compared to last year. That's huge. So yeah, look, interesting to see that people are getting cash. And look, one of the things that we've seen from a personal loan perspective, it's not necessarily all around debt consolidation. It is around, again, you know, doing those home improvements that you don't necessarily want to touch your mortgage to do so. You know, keeping that equity in the property is the thing that people are looking at doing. Buy now, pay later is up 19%. And you guys will know this better than me, but mortgage applications, including refinancing, is up 33% as well. So the other thing too, guys, like, again, I touched on where, you know, if you are meddling, or, you know, if you are a broker and you do a little bit in car finance and asset finance, I'd ask you to start looking at other things beyond just your cars. You look at this, for example, business equipment for earth moving equipment is up by 120%. You know, lending for agricultural equipment is up by 50%, and lending for trucks and trailers up by 35%. Now, one of the things that I say to my broker partners every single time is look at your customers, look at your consumer customers, look at your business owners, start segmenting what it is that you have there. And I guarantee you'll be able to see exactly what it is that they're buying, what their industries are, and you can start to market towards them more specifically. So have a look at that, guys. Now, the one thing that isn't in the slide, which is probably something that I want to address as well, is the market that I would be looking at right now. And if you were to do a marketing, I guess, spread to both your consumer and business clients, is leisure assets. You know, leading into summer, and again, you know, hopefully if all goes to plan, summer goes ahead as far as us being outdoors. People will buy leisure assets. They bought leisure assets in droves last year. We expect that this is going to be the same again. Anything from your bikes, your boats, your caravans, anything for you to be able to actually go out and see the country. We know that that'll be a spike. So start seeing if you could do a bit of marketing around that as well. Now, if you look at AmFin and us and what we do, anything that essentially has a serial number, we will assist you with it. That's the best way to describe it, right? You know, even with a lot of new hospitality businesses that are coming through, we'll help with your fit out, we'll help with the soft cost, the hard cost. We can help you with anything that can specifically look after both an SME and a consumer, right? Anything from your secured to your unsecured. Now, again, if we go into what we do, very simply, we've got a dedicated team of asset finance professionals here to help you expand your solutions to your clients, right? You know, we've learned a lot today around the different products that lenders offer. We're that intermediary that helps you actually, you know, educate you on what the different products are and assist you with those deals. So I think the most important thing that when you do partner with AmFin is the client is always yours. We never market to your clients. You know, we want to make sure that we integrate into your business and keep you at the forefront of every transaction that we do. So I think it's a really important thing. And apart from that, guys, I could go for hours. Brett knows that. Why AmFin? We are specialists in this. You know, we do consumer and commercial. We feel that you can do both. You know, we service the SMEs, customers, and financial advisors, including mortgage brokers. We like to think that we turn things around quickly. Our lender panel just continuously grows, and we make sure that experienced staff are there to assist you and your customer. And that's about it. Any questions, guys?
Nothing on the list there, George. Thank you very much, mate. Really appreciate it. Welcome aboard. And look, I really like what George is saying is to look not only just at the SME finance that's coming to you, but look at all the other things around it. Look at the cars, look at the auto. I know that in my business world, one of my clients last year, you know, specialised in auto finance, you know, through their network, they did 112,000 auto loans last year, and that's through COVID. So you can imagine what's available in the market space for you guys to talk to your existing customers, that it's not only about just doing a working capital loan, but it's also about, okay, how do I finance their personal cars, if they want to upgrade and all that sort of thing. So go for it and talk to guys like George and the rest of our sponsors and presenters today. And I just want to thank all of them. So thanks, George, and thanks, everybody. So that gives that runs us to the last of our presenters. And that brings us to a close for today. Look, I really hope you guys learn a lot out of that from listening to all of our presenters. I know I do every single time. I learn new things each and every time I host one of these sessions and get a lot of value out of it. So I really want to acknowledge all the national sponsors. There they are all on screen for you. You can have a look at them all. They continue to support us. They continue to support you guys. They continue to support the industry through thick and thin. So thank you, everybody. Second, you'll also make sure that you will get your CPD code for the 1.5 hours or maybe going closer to 2 hours. I don't know, depending on how much longer we go. Thirdly, there's a session tomorrow, session 2 tomorrow from 10 a.m. till 11:30. So look forward to seeing you all there. If you haven't registered for it, please do so. We've on the FBAA website, we've got Mindset Fit Coach Ashley Playstead, who's been around for a long time. You'll see by the grey beard and grey hair. Well, I don't know whether he's got hair anymore. He'll be talking about building the right brain and mindset for businesses and life success tomorrow. So that's going to be a really great session tomorrow. Also, next Thursday, we talked about it a little bit with Nicolette today, is you know, Are You OK Day. Don't be afraid to reach out. Don't be afraid to talk to a BDM, talk to your family, your friend, talk to a random stranger and ask them, are they okay? I think now it's more important than ever to make sure that we're all healthy in the mindset as well as physically. We've got all our other recordings on our FBAA YouTube channel. You can catch up on CPD hours, register for other events, all those sort of things. And then lastly, our heroes and villains. FBAA's greatest villain, Leah Renwick, didn't join us today. Our greatest hero, Peter White, joins us tomorrow. Our conference has been pushed back till the 5th of November for obvious reasons. Stay tuned. Let's hope that the world opens up and we are able to all visit and continue to go to the conference on the 5th of November. I've certainly got my tickets booked. I've got my costume booked as well. So I'm looking forward to having all of that. So hopefully I'll see a lot of you all again tomorrow. And I'm sure, like me, I'll be jumping on the news and socials to see what new social freedoms that we've now been given today. So have a great day, everyone. Enjoy the sunshine, get out and look after yourselves. Thank you very much. Take care.